Hey everyone, welcome back to my YouTube channel Commerce Tutorpedia. Yesterday, I've posted a video about Silicon Valley Bank crisis, and after the crisis, everyone is talking about the Great Depression of 2008. In this video, we are going to discuss about the Great Depression 2008. What was its origin? What was its causes? What were its consequences? And how is that crisis related to the recent crisis? And we are also going to analyze about is it going to SVB crisis are going to affect that much as the Great Depression did. So let us talk about this concept in today's video. I hope this video will be helpful to you guys in your upcoming exams. If you have any opinion about this particular topic, I invite you guys in my comment box, and all the comments are invited. So let us start this video. So the Great Depression, what was it and what caused it? Let us first talk about what was the 2008 Great Depression or recession. Okay, so according to Investopedia, we can see that the economic downturn from 2007 to 2009 resulting from the bursting of the US housing bubble and the global financial crisis is termed as the Great Recession. Okay, now the Great Recession was the sharp decline in economic activity that started in 2007 and lasted several years, spilling into global economies. It is considered the most significant downturn since the Great Depression in the 1930s. The term Great Recession applies to both the US recession and officially lasting from December 2007 to June 2009 and the ensuing global recession in 2009. The economic slump began when the US housing market went from the boom to bust. Okay, so you can term this recession as the begin when the housing market went from boom to bust and large amount of mortgage backed security and derivatives plunges into the value. Now let us first talk about the causes of the Great Recession. According to a 2011 report by the Financial Crisis Inquiry Commission. Now let me first tell you that I have taken this article from various sources like Investopedia and other various sources available on Google. So I hope these cutouts will be helpful to you guys in understanding the concept of Great Depression or Great Recession. The Great Recession was avoidable. The appointees, which include 6 Democrats and 4 Republicans, cited several key contributing factors they determined led to the downturn. First, the report identified failure on the part of government to regulate the financial industry. This failure to regulate included the Fed's inability to stop banks from giving mortgages to people who subsequently proved to be a bad credit risk. So what we got to know here that the report identified failure on the part of the government to regulate the financial industry. So that means the failure started from the government itself. This failure to regulate included the Fed's inability to stop banks from giving mortgage to people. So banks were giving mortgage to people without any limit, which proved to be a bad credit risk. Now the first cause is the housing market bubble. The foundation of the global financial crisis was built on the back of the housing market bubble that began to form in 2009. Now, what does it mean? Banks and lending institutions offered low interest rate on mortgages and encouraged many homeowners to take out loans that they couldn't afford. With all the mortgages flooding in, lenders created new financial instruments called mortgage backed securities (MBS), which were essentially mortgages bundled together that could then be sold as securities with minimal risk load due to the fact that they were backed by the credit default swaps. Lenders could then easily pass along the mortgages and all the risk. Outdated regulations that weren't rigorously enforced allowed lenders to get sloppy with underwriting, meaning the actual value of the securities couldn't be established or guaranteed. Okay. Now, second, the reason is the bubble burst. Banks begin to lend recklessly to families and individuals without true means to follow through on the mortgages they had been guaranteed. Such high risk loans were then inevitable bundled together and passed down the line. So these were the basic reasons. Okay, as the subprime mortgage bundle grew in number to an overwhelming degree, with a large percent moving into default, lending institutions began to face financial difficulties. It led to the dismal of financial condition around the world during 2008 and 9 period and continued for years to come. According to 2011 report by the Financial Crisis Inquiry Commission, the Great Recession was avoidable. So this is a big statement by the report. The appointees, which includes, okay, we have already read about this. Next, too many financial firms took on too much risk. The shadowing banking system. Now this is an important term that you must learn. What is the shadowing banking system? Which includes investment firm grew to rival the depository bank system but was not under the same scrutiny or regulation. When the shadow banking system failed, the collapse impacted the flow of credit to consumers and business. Other causes the report identified include excessive borrowing by consumers and corporations along the lawmaker did not fully understand the collapsing financial system. This created asset bubbles, especially in the housing market, as mortgages were extended at low interest rate to unqualified borrowers who subsequently could not repay them. The ensuing sell-off caused housing prices to fail and left many other house owners underwater. Okay, so these were the basic causes behind it. Now let us discuss the origin and consequences. In 2001, dot-com bubble implosion followed by the World Trade Center attack of September 11, 2001 hammered the US economy. The US Federal Reserve responded by Now, after this incident, the US Federal Reserve responded by cutting the interest rate to the lowest level since Bretton Woods to stimulate the economy. The Fed held interest rate low mid 2004. Combined with federal policy to encourage home ownership, low interest rate helped spark a boom in real estate and financial market, a dramatic expansion in the volume of total mortgage debt. Financial innovations such as new types of subprime and adjustable mortgages allowed borrowers, many of whom otherwise might not have qualified, to obtain home loans to generous terms based on expectations. Okay, now, however, from 2004 to 2006, the Federal Reserve raised interest rate to control inflation. As interest rate rose, the flow of new credit through traditional banking channels into real estate slowed. More seriously, rates on existing adjustable mortgages and exotic loans began to reset at much higher rate than many borrowers expected. As monthly mortgage payments rose beyond borrowers' ability to pay, many borrowers started to sell. Now, when the payment of mortgages rose beyond the ability of the borrowers, they started to sell their mortgage payments, right? So they started to sell it. Now the increase in supply burst what was later widely recognized as a housing bubble. Okay, now the things came to a head later that year with the bankruptcy of Lehman Brothers. Now all this thing was accompanied by the Lehman Brothers bankruptcy, the country's fourth largest investment. It was at that time the fourth largest investment bank. Now this has also happened in the case of SVB Bank. It was the 16th largest bank. What were the functions of SVB Bank? They used to help the startups in building up um, new businesses. The contagion quickly spread to other economies around the world, most notably in Europe. As a result of Great Recession, the United States alone lost more than 8.7 million jobs, according to the US Bureau, and this is a big um, effect. This caused a big effect in US economy, and the Great Recession officially ended. End date was June 2009. Okay, during the US housing boom, financial, okay, you can read it out. Now, there is one more act that we need to uh, discuss about, is the Dodd-Frank Act. It might come in your exams. So, not only did the government introduce stimulus packages, new financial regulation was also put into place. In the 1990s, the US replaced the Glass-Steagall Act, a Depression-era regulation that separated investment from retail banking to reduce systematic risk. Some economists say this move helped cause the crisis. The repeal allowed some large US banks to merge and form larger institutions, which many of which later failed and had to be bailed out. In response, in 2010, US Congress passed, and then President Barack Obama signed the Dodd-Frank Act, which gave the government expanded power. You must know that it gave the government expanded power to regulate the financial sector, including greater control over financial institutions that were deemed on the cusp of falling. It also created consumer protection against predatory lending. So finally, how long did the Great Recession last? So officially declared by the Federal Reserve data, the Great Recession lasted 18 months. How long? 18 months. Okay, from December 2007 to June 2009. So yeah guys, this was the Great Recession of 2008. And now I guess you know that why is this SVB crisis is related to the Great Recession 2008. So same thing happened during that time. Most of the banks got bankrupted, so got solvented. So due to which many of the buyers started to sell off their shares in the stock markets, predicting that they will face losses in the future. So same has happened in the current situation. I hope I was able to make you guys understand the 2008 Great Recession. For more such videos, please subscribe my channel Commerce Tutorpedia. Thank you so much.